What's up, everyone? How's it going? Welcome to today's market analysis or trade recap segment. Today is Wednesday, July the 23rd. We took one trade today, and I don't know if you would consider this a trade, but let's consider it a trade for the sake of this video. We took another trade, and we got out break even on that trade. So we're up on the day once again, but let's dive into what made me actually take these trades, the factors and conditions behind the trades, and the overall structure for the day as well. So let's dive straight into it, and let's first of all talk about the news that happened here today. And today wasn't anything crazy in terms of news. We had existing home sales and crude oil inventories, and we essentially just took a 2 minute interval between the news events simply to avoid that increased volatility in case of a crazy release of the news. So we were flat during both the news segments, news timings, but yeah, nothing really crazy with news. But you do see at 10:40 EU and US and EU close on a 15% tariff deal. That actually created this high volume that you see right here, and that high volume resulted in that sharp up move. That's all fundamental news based. Yeah, we do head up to that 6385 level, which is literally top taking the market at that point. And then we come flip to this liquidity level. Yeah, this honestly shows Bookmap liquidity is very, very, very essential to utilize, but let's take a step back and focus on the pre-market game plan for the day today. And essentially, it wasn't anything too crazy, right? What we saw was that on ES, we swept all-time highs once again, right? We took the all-time highs, and then what we saw happen was that we saw aggressive selling pressure start to occur right away. That put me in a somewhat bearish bias for the day, knowing that there's lots of volume at this one, not this 1 hour, but this lower two. Wait, which one is it? I think it was this one then. Knowing that there's a lot of volume at this area and also the zone below, it's telling me that price may be attracted to head downwards, and especially since we've kept taking at this area with buyers being unable to push through, with now aggressive selling starting to occur, market open, that put me in a selling bias. And essentially, once we found direction, we're going to try continuing with the direction of the flow of capital that we have identified. Now, if price did happen to continue towards the upside, we would simply try to gain a continuation of that move, whether that be through a retracement play or find the area where price found its top, potentially take a reversal play. But that's just simply the pre-market game plan for today. These are all the levels that are really important, mainly just the all-time high level in this 1 hour zone. Didn't really have much else. We did have two liquidity levels that I did remove now that I remember. We had liquidity down there which got swept after market open, this and this as well. So honestly, we had lots of liquidity to target on the downside before a continuation upwards, and simply we're just trying to follow that move down initially upon market open, and honestly that's exactly what happened here today. If you take a look at NQ, we'll see that that's pretty much the same occurrence, right? But what we see here is that NQ actually generated a 4 hour supply, and we're essentially within this 50% area with high volume. We know that this 4 hour has high volume because take a look at how it's standing as a support and resistance level. And we can simply mark this out on the volume profile as well. You'll see that right at the 4 hour will be a high volume node as specified there. And yeah, that's pretty simple market microstructure mechanics. But we saw that occur. We saw that we're at that area and we have levels towards the downside. Now, unlike ES, NQ was not at the all-time high areas. We're actually back down at the previous all-time high from last week. Now we're on the bottom of that range, or technically we're not at the bottom of the range yet, and that bottom of the range would mark a very high volume node. which price may be attracted to once again. So things are leaning towards the downside on NQ as well, but that's much more confirmed and visible on ES. So now that we've essentially outlined the pre-market plan, let's dive straight into our thorough analysis of the entire market session, dive into what led me to take these two trades and the factors before. But before we do that, I do want to say that today in pre-market live, we did hop on a bit late due to some technical issues, and we actually took this trade live on the pre-market live stream. And there were some things that I had to cut out because of some reasons, but this trade was taken live on pre-market today, and you can see that in our uploads and videos tabs of the YouTube channel. So if you want to see this trade get executed live, you can take a look at it. But yeah, and because of that, we missed out on a lot of the session after because we were worrying about some other thing, some personal things, but we came back around 9:10, 9:15. So I'm really looking to see if we missed out on any trades between this portion and potentially this portion as well, because we exited the market around this point because we didn't really see anything we could successfully play off of. But let's see if there was anything we missed out on, and let's dive straight into it. So here, this is where market opened. Hold on. This is where market opened, and as you see, price goes all the way to this area of passive selling. Large buyers come in. You see this large buying aggression come in, and then soon after, this is, yes, soon after, what we see happen is that we start seeing selling pressure occur. And by the time that selling pressure occurred, this is where we actually entered our second trade, right around this time. So we took this liquidity up top, selling pressure is starting to come in. Now we're retracing into what we have here, which are passive selling barriers. We see passive selling barriers here, and we see clear targets lower as well. We see this 6360 area, and more importantly, the 6355 area. So if price can break this area, it can definitely head on to this area, the 6365 area. And as we started seeing that sell-off occur, right? What we saw here was in this candle, I believe, right? In these two candles, we saw aggressive buying pressure occur, and we see a lot of volume getting generated here near these highs as well. Like, although it doesn't seem like much, we see a small volume node here where there's a very aggressive buying, and that buying was unable to push through even this initial passive selling barrier. As you'll see there, we pushed through it a little bit, but these buyers get trapped. And right when we saw this aggressive selling start to kick in, we entered. And realistically, we should have been able to enter around 6366, simply waiting for this barrier to be broken and to see that aggressive selling, maybe even earlier. But we entered at 6364 and an entire 8 ticks lower. So realistically, 7-2, right? 6-7 is there. Realistically, how we would have positioned it prior was 8 ticks above here. And it was previously 14, so it would be 22 right there. Stop loss would be up around the relative area, 6370. So it'd be right there. So this would have provided us a bigger yield on our return. But unfortunately, hold on, I did not mean to execute the intro again. But essentially, that's not what we did. We essentially took our trade once we saw that barrier break. And we got a late entry because we were on stream as well. We simply saw the aggressive selling pressure occur. And realistically, at this point, we start to see a bit of passive selling urgency follow through. And with that, we simply entered short. If price breaks above there, our trade will be invalidated nonetheless. But from where it's at, it's high probability that we'll head down to the 6360 region. and we just took it, rode the wave. Our trade, we entered and exited the trade for a 14 tick profit in less than a minute. And I'm not trolling about that too. It was 40 something seconds. This trade was there and it worked out in our favor. And that's the thing about early market open plays because your trades can be finished much quicker than if you would have taken it in a lower volume area. Because here we have 16K in volume, 17K in volume, 22K in volume. We have so much volume, but as we start heading down from that 16, 15, 14, 22, we go down to 9K in volume, 10K. 14 is decent, but then we go 9K, 8K, 7K, 6K, and then it's just reduced. You can see that clear curve in the reduction of volume, right? High volume near market open, slow reduce of that volume as the market progresses. So yeah, I mean, that's all I can say really for that trade. What we could have done better was find the entry earlier. We were a bit hesitant simply because it was so early into the market and we did not finish our charting as we hopped on the charts late. But realistically, it should not have been a bad idea to enter potentially even at these 6366 areas, which would have looked something like this. Hold on. And I did show this before as well, but I just want to update it because I don't think what I showed prior was pretty accurate. So this would have likely been an entry point. Our stop loss, if we maintain the same stop loss, we could have kept our stop under 5 ticks or potentially around this 1.5 risk reward. This trade would have been excellent and would have played out if we entered earlier. But unfortunately we did not, but we were still able to catch on a decent portion of that move. Just need to know that if we see our setup and system present itself, we should not be afraid of taking it early, especially if the signals present themselves and if we have a decent amount of conviction behind it. And that's exactly what we saw. But yeah, let's keep going. And now I'm really looking to see if I missed out on any trades, right? Yeah, right here was the point where we're still in the trade, keep in mind. I'm pretty sure, yeah, we're still in the trade. This was literally the point where I entered, I'm pretty sure. Yeah, I do remember now. I did not enter with this down move. I entered when we saw this very aggressive passive seller occur. I did not even mark that down on my trading journal. Give me one second. I'm gonna mark that down on my journal. Give me one second. I'm just writing it down real quick. Passive seller urgency with significance. So we saw these passive sellers come in very close to price. That's a that's a that's a big barrier for price to head to, and it can literally head down there much easier now. So that was our thing for first trade. And from that point, within 40 seconds, it played out perfectly. Now, maybe we should have targeted 6355, but targeting 6360 is much more risk effective, right? And now maybe here there's another trade as well, right? Because we see these aggressive passive sellers flipping liquidity. When we see that flipping of liquidity, we might have been able to enter another trade maybe at this 6358.75 level. I do want to see if that makes sense in a risk to reward setting. We likely could have entered into such. And what time is that? 9:46, so in this candle. And 58.75. Stop loss at 6365. Is it at 6? It is, but that wouldn't make sense in a risk to reward mindset. Yeah, so at this point that would have been a negative risk to reward, but as you see, it did play out very nicely. But yeah, that would not have been something we would have taken. Maybe if there was more space between these two levels, it definitely could have been something we could have taken. But since it was not, we did not take such. Maybe from here though. Definitely, nah, we see passive buyer urgency now. Yeah, nothing we could have taken there in my opinion. We're seeing passive buyer urgency get set up, and now we're just consolidating between that level. We do happen to break out towards the downside, but after a bit, as you see there, now we have a level at 6350. But we simply take that 6355 area and, ooh, wait a minute. We see a big passive selling participant get introduced. Let's take a look. That's pretty interesting. Maybe we could have lost a trade there. No, we would not have lost a trade there. The reason is because this is not necessarily showing passive selling aggression or urgency simply because we don't see much other passive selling at that area. Say if we saw a passive seller here and then this just got removed and now that's over here, as you can see that right now. If that occurred, selling, we might have been able to take sells, but also on top of that, what we see is that although buyers are potentially getting absorbed, we're not seeing a seller reaction from such. We're not seeing a lot of selling volume. And that's around that these two candles, right? First of all, lots of buying aggression, right? You see lots of buyers come in, next candle buyers are able to break through. This is a pretty bullish candle. You don't really want to enter reversal play off of such, especially when you don't see such significant reaction. If this candle was like this and next candle we started breaking down more and saw a reaction off of such with selling volume, then the shorts may have been viable, but not really seeing any viability within the shorts. And on top of that, spread of liquidity is pretty empty right now. I would want to see more targets or areas to target for us to actually take such trade. We do have the 6385 level, which is a pretty massive and important level. And as you see, that's where we top ticked out for after that news data. EU US tariff deal. Let's keep moving forward. Not seeing anything much. Spread of Bookmap liquidity does look to be a bit low, but as we zoomed in on Bookmap, it's a bit easier and clearer. So now we have two different levels, right? 6370, 6350. Where can we target? Right, and we also have this area that is blocking price from heading higher. So right now I'm looking to find direction within the market and we're not really finding it. Right now we've broken towards the downside. Doesn't mean we should enter shorts. These passive buyers are holding and we are pushing up. Doesn't mean we should enter longs, right? Because although there are passive buyers there, the overall trend does look short, right? We want to enter short when we see a market like such. With this big move, that could potentially stand as a retracement. Shorts could come again. And direction is not really found here. I would like to see direction and more room, more wiggle room between the different areas. See now here passive sellers are showing urgency again. Now buyers are coming in. It's pretty choppy at that point, but we are heading up. And then soon here we start to see selling occur. We head out to this region where there's lots of passive sellers. Now, if we had a lot of passive sellers here and not much passive buyers here with this target down here, and we see passive selling and absorption at that passive selling, that lined up with a previous heavy selling delta region on the footprint, that would have been an A++ setup to take. But as you can see here, we have passive buyers that are defending the shorts from coming in as well. Now, as you see, shorts do come in. We'll soon see it. Yep, there we go. Shorts do come in, but there's so many passive buyers that aggression is not being continued down to the target. No trades there whatsoever. Now, we did enter a trade here at 9:35, so right somewhere around here. Okay, I think the reason why I entered on such was that this selling occurred. We were looking for a reversal play there. This selling occurred. We have a target towards the downside, and we came back up into this heavy selling delta region. We retraced back up to there, and we want to see selling occur. Since we retraced up to there, we did enter the trade, but then 40 seconds after, we realized that our reason for entering the trade and our overall reasoning behind the trade was not that great. And because of that, we exited right away in 40 seconds for break even. Realistically, we should not have entered for two reasons. First, at at these highs, we're not seeing significant absorption, and you can see that from the footprint chart, right? We're not seeing too much volume there at the high. What we're rather seeing is a lack of volume at these highs, which may be showing exhaustion rather than absorption. And exhaustion can be a hit or miss at times simply because participants may be exhausted 1 minute but may come in the next minute. But there's not much volume being generated there, and if there was a volume generated there, maybe I would have more conviction, but there's not. And if you take a look at this lower 6350 target, from prior significance to now barely significant, it's losing value as a target, and that's typically not a good sign for shorts. Additionally, spread of Bookmap liquidity is not the greatest. It's not as clear simply because there's a mix of both sides. And in those type of conditions, our system doesn't play out the best, and no setups are present with the system as well. Let's just keep going on, see if we missed anything else. Turns out we did not miss anything between our trades. Maybe that liquidity flipping example, but that would not have made sense in a risk to reward perspective. Let's just keep going. Now we're just staying at these. Okay, I did not mean to do that. Um, where did we? Yeah, we were here. And as you see, those buys come up again. Am I tripping or something? Hold on. There we go. There we were. Buyers come up again, and now here we are seeing lots of volume being incurred in the market. And we're seeing that throughout this range, right? Let's just keep skipping forward. You'll start to notice and see these things as well. Now, that honestly looks like a good short play, right? Simply looking at the footprint chart, big level there with significance, large amount of volume. You see lots of aggressive buying enter in during that point. Sellers take over. We see lots of buying delta, but the candle closed red. That is a bearish signal that's signifying buyer absorption. But we cannot take such simply because we have nothing really to target on the downside. And passive barriers are preventing price from heading lower. We have this entire region of 200 passive buy orders, 136 passive buy orders. We're again between two passive locations of orders. Not the greatest signal on either end. And honestly, we could likely skip through most of this part. We took it, we swept it up once, now we came down. We're playing around at the passive buying liquidity. We're going back up. Now, ooh, maybe we could have taken a short here. I do want to see. I think I was about to take a short here, but I did not because of what will happen next. Because here it looks like a great reversal play. If we saw a barrier on top of that to target the next level, it would have been peak, right? But what you soon happen to notice is that this passive region gets broken very quickly, and we start to see passive buyer aggression and passive buyer urgency. But now the passive buyer area gets swept, but we see buying pressure occur from right around 817, so within this candle, we may have been able to take a long simply because we entered into that area where we saw buyer aggression and likely saw potential seller absorption. Seeing aggressive selling delta here as well. That's not able to push down below these 6-0 levels, only 2 ticks below. And once we've broken below that level, not much selling interest from sellers at all. That could signify longs. And I'm gonna say we're not gonna enter long simply because of the fact that this is broken. But for some of you guys who may have entered long or may have wanted to enter long, your longs may have looked okay. I did not want to skip out that far. Your longs may have looked like this. 6-1. Where's 6-1? Right there. Stop loss. Right below the lows, right below this area. Maybe you can use a previous area of seller absorption. Maybe here, 58.75, just to keep some room. 9 tick stop, where will we target? We will target 5365, which is right here. It's a 1 to 5 risk reward. Very quick trade that would have played out very nicely. Low, you're barely in drawdown for the entire trade, so nothing more I can say other than that. You'll see this trade play out very quickly. And it's not a bad trade, I just didn't like that this passive buyer barrier location had gotten broken. And yeah, honestly, that marks the end of market session, but let's just keep going until 11:30 Eastern Time or 10:30 Central Time. And right at 10:30, we broke these highs and we were able to push through those highs. Or were we? No, we were not. God damn, this was a choppy market, right? Saw potential buyer absorption there. Nothing they're preventing us, but nothing really there to target as well. Maybe, I'm gonna say maybe, there was a retracement play here. And the reason I'm saying it is because I'm seeing heavy selling delta here. And that news does happen to play. I just want to see if there was around 10:35-ish. If there was, that may have been a great potential play to take. And there was not, so nothing really we can say there. Targets are primarily towards the upside. And let's see how fast that news came in and impacted the market, just for curiosity reasons. Buying pressure, buying pressure. Okay, that was very quick. Yeah, that's quite insane. Very, very, very aggressive buying. But yeah, that was just for curiosity reasons, but we essentially analyzed the entire market day to day. The two trades that we did take were likely the best trades we could have taken. Maybe another one we could have taken between those two trades, but kind of iffy on that. But other than that, I don't really have anything else much to say. If you have any questions, feel free to join the free Discord server. Link is in the description down below. Everything's completely free, and I truly believe you can get a thing or two out of it. Additionally, you can also leave a comment down below. on top of that, if you want to take advantage of free order flow resources like the live stream and great footprint charts like this, all for completely free, check out the links in the description as well. Addis charts, where I'm using my footprint charts, are probably one of the most user-friendly resources I have personally used, and there's lots of free functionality with it as well. So you can start integrating it into your strategy even today. So highly recommend you guys to check it out, but as always, do your own research. Other than that, I don't really have much else to say. So I'll see you guys tomorrow morning for pre-market live. So I guess I'll see you guys then. Goodbye.